Just working one day when all of a sudden, oh, squeezing the lemon diamond-handed says, just tweeted me a DD from Carlos Trade. Well, I guess I'm gonna have to read it. What's going on, guys? We're gonna read a little bit about Carlos Trades. He gave us a comprehensive overview of what happened earlier on in the GME saga. We covered his DD before, and now we're gonna cover this one. Sorry for the delay, but it's literally cost him 3 freaking hours to put this mini thread together, and it's going to cost you more if you don't start investing your time into your financial education journey. Best way to do that is to follow me and subscribe to this video, because the more subscribes that we have, up to 100,000 subscribers, we are going to continue bringing us along the journey, and likes on this video help show other Moon Platoon members. So let's cover this. Sorry for the delay. It's cost me literally 3 freaking hours to put this mini thread together. My only request is that you quote, retweet with GME and AMC hashtags. That's once again at Carlos Trades, right? Go ahead, retweet him. Make sure that you are showing him some love. Boom. Oh, hold on. I'm gonna have to like this thread. Here we go. Read this, you will understand without a doubt and be able to educate others how it is that the price keeps dropping. This is the question everybody asks him, especially when he says that the hashtag stock drop, people buy it. Help me spread like wildfire. Here we go, GME. Over the course of the recent days, they've noticed something that has been bothering him big time. That is the borrowing fee of GME. By comparison to everything else, GME fee is lower than ICE, AMC, TCAT, most other stocks, to be honest, which they find irrational. And of course, we have seen this ourselves. Here is the borrow fee versus the short availability float, right? This is a logarithmic x-axis, which means that this goes up from 1% to 10%, 100%, and then 1,000%. Look at TCAT, right? TCAT has almost no shares available to borrow, and therefore its borrow fee is close to 500 to 1,000%. Not GME though. GME's is under a 1% borrow fee, even though it's on the same x-axis as TCAT. That's just a little bit more about exactly how unusual this is. Every other stock lands on this distribution somewhere, but not GME. So back to Carlos. If the price was going down, wouldn't the fee be blowing up? I mean, CNBC and reputable finance websites are telling me the price for GME is going down, yet the fees are this low. However, put your tinfoil hats on, this is where we go nuclear. The situation, in his opinion, is more dire than it appears. You should know that about naked shorting, and if you don't, let's recap. Naked shorting is the act of short selling shares that do not exist. Naked shorting is very similar to counterfeit money, where if you introduce too much cash into an economy, the value of the currency will drop. That's kind of like just regular money too. That's inflation. Mr. J. Powell, the money printer, could end up causing the value of the currency to drop, and counterfeit money would too. The only difference is that naked shorting is oftentimes very legal depending on your intentions. The more there is of something, the less valuable it is. Same concept with naked short. The question is this illegal? Yes, with malicious intent, right? Why does this happen so much with GME, and more importantly, why isn't it stopped? Good question. So hedge funds are allowed to buy SEC to sell hashtag stocks, in this case GME and AMC, before they even have them, because of their positions in the overall market, carrying such huge trades and trading so quick that they have billions in assets moving constantly. They are granted a privilege to sell without having it. Right? This is the concept of a naked short. It's the same concept as when you get paid. The checks actually take about 2 weeks or so between banks, but you receive the money instantly on Fridays while that process takes place. Same here, and it makes total sense. The problem lies in that there is not enough supervision. Hedges, hold on, what? Dallas Harvey is saying, give Meatball a treat for this joke. If you get alimony from a divorce, then what do you get? Do you get hegemony from the short? Oh man. Almost don't want to give him a treat for that. Thank you for the dad joke, Dallas Harvey. Okay, their problem lies in that there is not enough supervision, and hedgers are taking advantage of this to cover their position, which according to some Wall Street Bet estimations can be an overexposure of over 200%. To disguise this, they employ the power of options. These hedge funds granted by the SEC2 are allowed to share the power to others that meet certain criteria to sell shares without actually having them. See, this is how crazy this is getting. So this new hedge fund that got loaned the power to sell stocks without having them raised money by selling put options and making a profit off of the premium. This money is then used to counter the positions they were originally caught. However, the catch is that before they sell puts, they also sell short stocks. That way, when the puts are sold, the stocks drop and then they have to buy it back and keep the difference. Hence, why we see these vertical drops in price. This explains it all. Once more, right? Well, the catch is when they sell puts, they also have to sell short stocks. That way, when the puts are sold, the stocks drop. This is the conversions that we talked about in the How to Lie to a FINRA report video. If you guys want to see that, I'll link it down below. It's really simple when it comes down to it. If I don't link it down below, it's because I forgot, and you guys should write in the comments that I should do that. It's one of the videos that essentially says how to lie to FINRA. If you were doing that calculation, you are wondering, so wait, these stocks people are buying that don't exist, what happens to their value, especially when there are so many people buying them? Do you lose your money? The whole point of the movement is that hedges are so indebted in GME that they would be forced to liquidate every asset to cover for this scheme. That's the margin call, right? When they finally don't have enough money, that even if they sold every other stock, they would still not be able to buy back the GME that they owe. That is the margin call. That they are, as you can see, trying to prolong the process to try and raise as much capital as possible to cover as much as they can. This explains why the borrow fee going back is so low. They are enticing everyone to buy with drastically low fees by adding uncertainty to the market when they vertically drop the prices through the process that Carlos just explained. It's a cycle. Hedge fund shorts GME and places puts on GME. The GME put is bought, which raises capital to the hedge because it lowers the prices, especially when exercised, plus the revenue from the premium. They then also buy the stock back and raise that capital, #stocks. This is similar to the same idea of a married put conversion, not quite the same, and I think Carlos understands that nuance, hopefully. If you guys wanted to fully embrace that nuance, that video once again that we just released yesterday. Right now, the problem with GME in particular is that the market capitalization is unknown because of naked shorts. There are a lot of theories as to what the price for this is because the data is unknown, since so many naked shares, the fake currency version of stocks, have. This is a little dangerous because he's trying to say naked shorts are the same as counterfeit money. Counterfeit money has no actual obligation. Even a naked short, if you bought a share of GME and it turns out that the person that sold that share to you was naked shorting that particular trade, it's still a share of GME. They just have to find someone at the end of the day. For a counterfeit bill, like a US dollar that doesn't like one of these, where's all my fake money? Here. Like one of these bad boys, that has no obligation for anyone to cover. So there's not quite the same as counterfeit money. Let's see. With the DTCC recent actions, it shows that they are also scared about what is going to happen, not only the GME and AMC, but the entire market. The fact that they are doing this demonstrates to me that they are in a really bad position. Liquidity shortfalls, right? This is the goal of managing NSCC's qualified liquidity resources to maximize resource availability in a evolving stress situation, to maintain flexibility in the order and use of sources of liquidity, and to repay any third-party lenders of liquidity in a timely manner. We've talked about all of these brand new NSCC rules here. Some estimates on Wall Street Bets by really good DD projects projects that they are under 150 to 200% under. Well, folks, that is all. I hope that you liked this thread. Took him a long time to put together. Seems like he is a knowledgeable fellow, and a lot of this connects to the story that we have been telling for the last few videos here. If you guys wanted to watch a playlist of this put together, then go ahead and play that playlist as we go along. I'm going to take this, put it in the description so that you guys know how to give Carlos some thanks. Carlos sourced. And as always, thank you, Squeezing the Lemon Diamond-Handed, for dropping this suggestion. If you do want to also interact with me, follow me on Andrew Mo Money on any social media platform is a good idea, as well as smashing that like button so that more apes can find Carlos's DD and show him some love from the description down below. If you guys like this video, thank you for liking it, and if you guys want to follow along for your financial journey, subscribing and hitting that bell button is the best way to do it. We're on our way to 100K, and we'd like you to come on board. Thanks to all of the Moon Platoon members that joined on this tier, the Meatball the Space Legend tier, and the Gorillionaire tier for keeping and supporting the show on the air, and we will see all of you in the money.